January 28th, 2026. Let's go over the strategy and review the trades I took today. And we're going to look at the daily momentum before we get started. As always, we look at the daily momentum. What is going on in NASDAQ on the momentum side of things? This is a MACD histogram. This literally just tells you momentum. What are we doing? Before the market opened today, we can't tell in the future, we don't know what's going to happen, right? Before the market opens, before this bar right here, what do you see? There's an increasing momentum to the upside. Buyers are increasing. That's what this means. If you get this and you pair that with increasing volume, it's even more of an alarm. But when you have momentum rising on falling volume, it can be a good place to anticipate an upward move either way. Just the rising volume would make it even more potent of an indicator. So let's go over the trades I took today with the 1 minute and the 5 minute synergy stacking momentum. The first trade was right here. Why did I take this trade? We see that we are on the right side of the momentum to the upside. I'm playing to the upside because our 5 minute twins, 5 minute regular hours and the 5 minute extended hours, are now lined up. They're in sync, they're going up. This is our higher time frame. This is the 30-minute momentum, and this is the 2-hour momentum. But we don't care about these as much as we care about the 5 minute and the 1 minute. So there was a power volume bar right here. We had a volume bar greater than the previous three. We were on the right side of the momentum. That's why I entered the trade. Stop loss, you enter right at the close of the candle. The stop loss is slightly below that candle somewhere, right below. Sometimes you use the previous candle. Then you use that first fib level, which is essentially a 2-to-1 as the first profit target. And then you allow the remainder of your position to go forward to capture more profits. That was a first trade of the day there. We're going to go over the second trade, which was in Palantir. In Palantir, we took a trade here because the momentum started to shift back to the downside right here on this candle. Anytime you see a yellow line, that means that it's a trade that I took. The 5 minute, the 30 minute, and the 2-hour were all going down. We are stacking momentum on 4 time frames. This is what I call a fractal 4 as opposed to a fractal 3, triple fractal, quadruple fractal. Our entry was here at this candle because this is where we get a volume confluence. At the close of the candles when we enter the position, maybe 5 seconds before the close, sometimes if you want to go early. I put the stop loss right at the base of the candle, so the profit target did get hit, but had I gone higher up, the profit target would have never been hit, and it would have been a loss. I had my stop loss right at that candle because this was a big candle, and I don't know why, but I chose it. I got a little bit lucky. So it did hit this profit target here. And then the next trade I took was in Amazon. In Amazon, the market started to sell off, and these dashed lines are pre-market levels. They're on every chart. We have these dashed lines. These dashed lines are previous day high and lows, pre-market high and lows. That's what those are. So this is the previous day's high, this pink one. We are breaking through the previous day's high with a huge selling volume candle, power volume bar, and our 5 minute twins are giving us permission because they're both aligned to the downside. The higher time frames had some support as well. So this trade turned out to be better than we hope for in life. You know, this is what we hope for in life. This is what we call a grand trade. It never came back. It never came back. So we took profit at the original profit target always. You enter at the close of the candle, put the stop loss slightly above it, and then that first Fibonacci level is where the profit target hit. So that's great. That was a win. And then you allow your remainder of the position to continue on getting more and more and more profit. And that was a great trade for the day right there. Wonderful. Wonderful. Hit all the profit targets and just kept on going. The next one I took was in SMCI because I noticed the same thing. I always trade the same setup. What happened? Right here we have permission to take short trades. And then right here we get a volume confluence, a volume bar greater than the previous 3, and the momentum is going along with the trade. It's not going against the trade, the momentum's going with the trade. So we took that, and this went on to hit almost the final target. This was a huge win right here. And I sold a little bit early because of impatience and because of immaturity. I'm still working on discipline. I have to wait until this profit target is hit, but sometimes I'll take profit a little bit early. The next one was in Palantir. Again, later on in the day, we were already selling off. Right here, look, we're already selling off. This purple line represents the previous week's low. This is the low of the previous week, this purple line. We broke through, we retested the previous week's low. We retest, look at this touch, we touched again. I mean, this is classic. Started building momentum as a rejection. The 5 minute was in the red already, and it was popping down and giving us permission at the time I took the trade. And the higher time frames were aligned as well. This is essentially a fractal 4 that's about to occur. And why did I enter? Because the volume confluence. I should have entered earlier because there was a volume confluence right here, but I missed it. And then this volume confluence was massive. I entered here, that was a win, and it never came back. So when you have runners and you allow your runners to run, they can generate profits sufficient enough to erase the future losses that you'll inevitably experience. Letting your runners run to capture big wins is insurance against probability in the future going against you. The next trade and the last trade of the day was in the NASDAQ, and it happened at the end of the day, right here. I took a trade right here because there's a yellow line, and the 5 minute was giving us permission, and then we had a pop to the downside, so the momentum was starting to go to the downside. And we had a volume confluence right here, volume bar greater than the previous 3. So your entry is here at the close of the candle, your stop loss slightly above, and this was technically a loss. It was technically a loss, ladies and gentlemen, because the entry was here, stop loss would have been like right here, and that first profit target, see how close it got? It got close to this first profit target. The first profit target is right here, I'm highlighting it. So that's the first profit target, this green line, blue-green line. The price didn't, it touched it for a millisecond, okay? But then it went back up to hit the stop loss. So why was it a win? I said I took 0 losses today, and I took the win on this trade because I took profits a little bit early. I didn't wait for the actual profit target to get hit. I took profits a little bit early. That's what I did. So even though I had 0 losses, quote unquote, though I had 0 losses today, I still didn't trade correctly, and I should have actually had like 1 loss or 2 losses. Isn't that weird? Had I actually traded correctly, I should have had 2 losses. But because I traded a little bit incorrectly, I had 0 loss. That's kind of that's a confusing, non-intuitive predicament right there. Maybe I should take profit quicker, I don't know. Either way, with all that being said, I do hope you have a good rest of the day.